Hello there, traders. Hello there. Good afternoon. Good afternoon. Welcome to Paul's Monday Market Update, number 224 for the Monday, the 11th of May, 2026. I hope you're all well. Hope you've had a good weekend. Hope you're ready for another interesting and eventful week in markets. As always, that has been the story of 2026. Just a quick bit of housekeeping. This will be the last one for a couple of weeks. Okay, we'll be taking a 2-week break. I'm away and traveling, and we'll be back on Monday, 1st of June. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 odd minutes as we take a look at strength and weakness within the FX and indices and commodities markets, look at a few charts of interest, and then take a look at the live markets. It is not a signal service. It is not trade recommendations. It is just me sharing what I'm looking at, which may be of interest to you, and you might want to add it to your own watch list. As always, you are always very welcome here, but just remember that you are always responsible for your own trading decisions. And if you want a little bit more education this afternoon at 2 o'clock London time, I'll be delivering the next of the Active Trades Monday Market Matters webinar, which will be all about how to debrief your trading. You can sign up for it on their website, Active Trades, or that QR code will take you to the registration page if you want to join us. And for those of you who need a little bit more discipline, accountability, and consistency and structure in your trading, you can join the VTP Trader Accountability Group. The tag is all about helping you build that discipline, accountability, and consistency. You can ping me on my mail, or you can use that QR code, or use the Bitly code if you want a few more details. Okay, so let's dig into the data. What are we looking at here? Well, this is just some snippets from my own weekend model called the STAM, where I'm looking to identify the sort of strength, trend, and momentum in FX markets, indices, and commodities markets. And the reason I do it is that it basically helps me sort of effectively sort of focus and prioritize my time, energy, and resources for the week ahead. So, what is this telling us, and actually, how can we help it in our own trading? So, let's just bring up the old drawing tool. What's the story? Okay, we are into the 20th week of the year for 11th of May. Where's the strength and where's the weakness within FX markets? Well, we still have Aussie dollar, okay, at the top of the pile, okay, as of the sort of Saturday weekend when I did this. And what is interesting is that in that piece, well, we also had Kiwi dollar, okay, jump to the second spot from really from where it was the bottom of the pile 4 or 5 weeks ago. And that is probably a reflection of at the end of last week that everybody was in a war off, risk on mode, okay, and that's reflected by a couple of risk on currencies, flying to the height, whereas actually US dollar remained at the bottom and Canadian dollar rolled over and fell away as everybody got a little bit giddy, a little bit excited, and worked towards the idea that there was likely to be a permanent peace deal. However, those of us who have followed markets for a long time, or those who've even just followed markets this year, will have quickly analysed and realised that there's an awful lot of flip-flopping going on during this particular period, whether that is by plan or whether that is by happenstance, okay, or chance. You can debate amongst yourselves. But what we saw over the weekend was invariably the President Trump effectively sort of declining the Iranian counter offer, and invariably, that had an impact on markets, as we will see when we look at the live markets in a moment. So, yeah, we are back into this hour as I'm speaking to you, into a kind of war on, risk off sort of environment. All right, but that's going to swing about an awful lot, I suspect, over the next couple of days. So, as always, as you hear me say, it is important for you to be on top of your risk management, top of the news flow, and top of the order flow during these interesting and volatile times. So where else were we looking at? Well, Swiss franc kind of, sort of has nudged its way back up there, okay, into that pile, and Japanese yen had a little bit of a bump based upon some of the intervention and some of the comments out of the Bank of Japan and Ministry of Finance. Euro is just middling along, and sterling weakened, okay, from where we had been there, okay, in second place a couple of weeks ago. Sterling weakened. Interestingly, overall it weakened off the back of the let's say the political instability in the UK. Prime Minister Starmer getting a proper kicking in the elections, okay, in the election results we saw, but that has not dissuaded him from doubling down on his worst decisions, okay. And so what we saw today was invariably his reset speech. A friend of mine informed me that this is his 30th. He's not even been in place 2 years, and this is his 30th reset speech. And if for those of you watched it like me, well, you'll have probably been as inspired and motivated as you were from every other one, which is to say, not very much at all, ladies and gentlemen. But it's an interesting conundrum because actually, whilst there is, let's say, an element of weakness associated with the kind of political instability, there's actually weirdly also a little bit of strength because the longer Starmer and Reeves stay on, the easier markets are, or the less nervous markets are, about the trajectory of travel. What markets are desperately concerned about is if they do get rid of Starmer and Reeves, well, who replaces him? Okay, who comes next? Because Starmer and Reeves were seen to be the smartest of the bunch, and after that, the kind of quality of individuals just falls off a cliff, and that is what basically scares markets. And maybe we'll look at that a little bit moment in when we look at the gilt 10 years. Okay, but sterling, as I said, further middling in there. What we have seen, if we look at for FX markets from where we kind of started today, well, actually, not surprisingly, everything has kind of weakened against the dollar. A lot of that because, as I said, President Trump declined the Iranian counter proposal or the Iranian comments, and so of course the natural inclination is sort of war on, risk off. And as I said, we will see what happens to that. Of course, remember, President Trump is also supposed to be meeting the Chinese, okay, President Xi, okay. So of course he's going to want to do that from a position of strength, and perhaps that's part of the Iranian negotiating position. We shall see. Interesting. Well, as of interest to me is that if I look at all the major currencies that I look at, well, invariably, there's an awful lot of them. They're pretty much all in STAM configurations, the only one being Swiss yen. And interestingly, a lot of the Aussie and Kiwi ones in STAM 1 or STAM 2 buying combinations, which just effectively also helps confirm that, overall, we are still in kind of Aussie strength, Kiwi strength position, with kind of yen and now Canadian dollar at the bottom of the pile. When we quickly look at indices and commodities, well, once again, what we can see is that pretty much everybody, apart from FTSE, when it comes to the sort of, let's say, major global indexes, are in STAM 1 buying. There's an awful lot of green there, isn't it? Everybody's getting green and giddy. Okay, that's what happens. And as we will look at, what we saw with S&P, Nasdaq, and Russell is that they closed once again on the weekly chart at all-time highs, whereas the Dow is just sat underneath the 50,000 level, which we'll look at in a moment. Silver, okay, silver also remains in strategic buying. There's been some interesting price action there. We see the VIX is supporting bullish action, and Bitcoin once again it remains in its STAM 2 Bravo, okay, and with a nice daily trend there. So yeah, everybody's in that kind of, as I said, everybody's in a war off, risk on, giddy mode, but we will see how that plays out over the next 24 to 48 hours. As we see these American markets start to invariably price in or respond to the sort of over the weekend shenanigans between the President Trump and the Iranians. We've got a bit of data this week. It's not particularly strongly, but there is a fair bit of US data that'll be coming out. Okay, so you might want to keep an eye on that. And for those of us here in the UK, we've got GDP on Thursday mornings to be aware of. Just looking at the sort of latest STAM. So this is a plugin that people on VTP Stage 2 get just to sort of reflect there. As I said, there's an awful lot, okay, in STAM environments, and this updates every 4 hours for me. And what we can see is, it's just still reflecting that Aussie still remains top of the pile. Kiwi dollar is in second. Swiss franc, okay, is working its way up there. Then you've got kind of sterling, but what I did is that this is just a snippet out of my intraday trading this morning on sterling. Okay, as I came into the session, an awful lot of bearishness there. Okay, on sterling, and of course, then as I said, we had Starmer's reset speech there at 10 o'clock, and if you are struggling with insomnia, perhaps maybe you might want to watch a recording of that tonight, because I think it'll send you to sleep. It'll either send you to sleep or send you into a dark, miserable place. But it was a busy morning for me with that. It was literally 7 trades, okay, across sterling pairs this morning, 5 wins, 2 losses on that, but pretty much all on the short side, okay, not unsurprisingly. The daily, the 4-hour, the overall sort of sentiment to the bearish side on sterling, okay, and that's how it particularly played out there. But we're going to look at the live charts a little bit, because it's been interesting in the last half an hour or so. Okay, so there's a little look at sort of strength and weakness across the markets. Let's have a look at let's have a little look at some charts of interest. I've got a good few for us to go through. So if you'll just bear with me for a moment, what we're going to do is switch across to the other charts and start to have a look at some charts of interest. Okay, so let's start off with our charts of interest. What are we starting off here? ISEQ, okay, if that's how you want to pronounce it. ISEQ, the Irish Stock Exchange, and it's something that we've talked about for a while. Okay, we've covered it every so often. And I've got an interest there. Okay, and back and forth, and we can see this is the weekly chart, and has for the most part been in a very nice uptrend. And I've talked about kind of bounces off the 50-period moving average haven't been really quite nice moves. And what we saw was we got up to the 13,000 level there, and we started to roll off the top. But once again, we bounced off the sort of the 50-period moving average. But what's of interest and curious to me is that we once again we kind of topped out at that 13,000. No, we haven't been able to push to those highs. Now, and furthermore, last week, okay, we tried to push up, but as you can see, we fell back and we actually closed beneath the 20-period moving average, which has started to turn down, whilst the 50, okay, is starting to spin up. And so my view is that actually perhaps we are just a little bit coiling up there between the 20 and the 50 on price, and we're waiting to see, well, what's going to actually happen. Now, what you need to be aware of with ISEQ is, of course, is that it's the Irish Stock Exchange, but of course it does take a lead from ECB commentary, and also from strength in the euro, or lack of it, but also interestingly also from sentiment with US tech stocks. Okay, there's an awful lot of them have a lot of, let's say, real estate in Ireland itself. But what you see with the ISEQ is that you've got banking and construction names. Okay, they still remain sensitive to any changes in rate expectations from the ECB, and any kind of change in that kind of broader Eurozone growth sentiment. And then, of course, also any renewed tariff friction between the US and EU, or weakness in global tech, that can sort of weigh disproportionately on the ISEQ, okay, as well. So, as I said, it's coiling up, and we're going to have to wait and see whether we're going to get something that gives us the sort of the catalyst for the next move, either to push to highs or to break that 50 and roll lower. So hence you might want to add it to your watch list. Something that hasn't had any problems, okay, pushing to new highs is EAM, okay, so the Emerging Markets Index Fund. Once again, this is the weekly chart, and has been on a bit of a great move, really. Okay, bit of a great move there. Okay, you can see, boom, ever since those kind of lows after the sort of tariff tantrums, as dollar weakened, all right, that helped the emerging markets fund. We can see that there was a little bit of the sort of the war fall as dollar strengthened, But actually, you can see for yourselves that we have continued to bounce and push higher, and also, kind of really closed its way there at kind of, I think, kind of real weekly highs there. Okay, so um, what do we see there? What do we need to be aware of? Well, remember those emerging markets, they're pulled between US dollar expectations. You also have concerns over kind of slowing Chinese growth momentum. For those of the emerging market nations that are commodity exporting, well, of course, they are benefiting from elevated kind of spend on defense, energy, infrastructure. And also, it might also be said that rebuilding of parts of the Persian Gulf that will be coming. And also, as I said, you've seen capital flows into emerging markets. Okay, they've slightly improved as traders start to price in a kind of a less aggressive Fed pattern to the second half of 2026. So the thing about this emerging markets is, US dollar direction remains critical. Okay, a stronger dollar could reverse these inflows pretty quickly and also pressure those risk assets. But I think that's also giving us a bit of an indication of, as I said, that overall war off risk on mentality. Everybody wants it. So we will see whether they're actually President Trump and the Iranians are actually able to sort of, finally sort it out. Okay, next, this is Gilt, UK Gilt 10-year yield. Okay, yield and 10-year Gilt. So once again, as always, this is the weekly chart. Okay, and there's a couple of things here on this. So bang, I'm just gonna zoom us out a little bit. And the reason is that, back here, okay, 2022, August, sort of into August, July, August, September 2022, what we saw was, you can see the absolute acceleration there, okay, of the yield of the Gilt 10-year. And a lot of that was driven by the supposed Trussonomics, okay? Truss and her Chancellor, Kwasi Kwarteng, their sort of emergency budget pushed up those gilt years. There are people far smarter and wiser than me that would say that there was a whole host of other matters that basically had an implication upon that. Okay, but the damage was done. It was enough to rock sentiment, and it was enough to basically to end the sort of the Truss premiership. I think was it 44 days or something like that. But we can see, what happened there. And once she'd gone, well, price started to drift back a little bit. So that is a kind of little quick, interesting history point, because where we are is, of course, we have traded back through that over the last 2 years since the Labour government and the premiership of Starmer Reeves. And what we find ourselves at here is up at the kind of 5% area. And I said a little bit earlier, that sterling's in a strange place because there was weakness, but not as much weakness as they thought there would be, because Starmer has said he's not resigning, certainly today in this hour, he's not resigning. And as I said earlier, people are more worried about who comes after the Starmer and Reeva clown show, and that's what's worried about. What I am interested in is here on the weekly chart. Look at this. I see this at the 5%. I see this as actually as a double top here. I also see this second leg here. That to me is, that's a bearish engulfing candle. It's actually also a bearish key reversal candle because we pushed to new highs, but rolled over last week and closed beneath the low of the previous candle. That's kind of a double top. There's a confluence of events going on there. Okay, and a lot of them have been expecting to sort of see the yields drift down off the back of an invigorating and inspiring 30th reset speech by Starmer. But as you can see from today, that has not been the case, and actually prices, pushing its way up here. Where are we? Up 1.3% today. Okay, that's how markets are initially interpreting Starmer's insipid speech. So, I'm watching this for all sorts of reasons. Okay, one, because I live in the UK. Two, I'm fascinated how this impacts GBP, but also just naturally a kind of interest in politics and economics and how it works out. Okay, my mentor told me many, many, many years ago that when there is a battle between politics and economics, politics wins the day and then economics wreaks its revenge. And I think this is what's happening here personally. So the government are making lots of presentations, lots of promises, but actually, the markets know that they have neither the clout nor the competence to be able to deliver on it, and that's what we're seeing here. And I'm curious to see, is 5% going to stay as a hard level, or are we going to push higher from there? Okay, so it's we're at an inflection point, okay, where I think a decision will be made. Okay, next, let's have a look at Ondas. Okay, Ondas are one of the many companies that have got their earnings report this week. Okay, so they're kind of the big boys. Most of the big boys have been, but there's still a full kind of full earnings report listings for this week. And on Thursday morning we have Ondas. Who are Ondas? I have touched on them a few times because they kind of trade as a bit of a, you might say, speculative small cap AI, drone, and defense technology play. So there you go. They've gone for the trifecta of bingo words: AI, drones, defense technology. Okay, all of them very exciting at the moment. And so. So long as there is interest in autonomous systems and military drone capability, as long as that remains elevated, because of ongoing political tensions, there will be support here. And of course, like any small cap, okay, you're always looking at the kind of liquidity conditions, all right? They're always a little bit brittle, and it also basically is, it's kind of easily swayed by sentiment. As in swings in sentiment can really create a fair bit of volatility. So Ondas, all right, we'll have to wait and see what their earnings are like on Thursday, but it is a bit of a momentum sensitive name, all right, and so you want to be keeping an eye on this. I see this personally, I see this as that we have spent, okay, coiling up and pivoting around $10. All right, we flew to $15, but come back, and then really, if you look at that, we've just spent pretty much the last 2 months, all right, since the start of February. Yeah, just I would see that as pivoting around, okay, pivoting around that kind of $10. Well, you might be saying, well, actually, Paul, is this starting to coil up a little bit, even, that we're getting ready for a catalyst. Now, perhaps the situation in the Persian Gulf is the catalyst, either to the upside if we go back to war on risk off, or it's to the downside if we go into sort of kind of war off risk on. So I would be watching that this week to see A, what the earnings are, but B, also how much the sentiment swings it about what kind of volatility does that bring to the party. Next is Wix. Okay, Wix.com. All right. So once again, they are also reporting this week, so that kind of makes it interesting. But equally, one of my websites is run on Wix. We'll leave it to others to discuss the sort of technical capabilities of Wix and websites. All right, but I've exposure to them. A website that runs on Wix, I have exposure, don't I? So it's in my interests to take a little bit of a look at these guys. So they have benefited from, once again, bingo words of AI integration, all right, website creation, automation, all right, and digital infrastructure, all those words that everybody loves to bound about. As investors, well, you can see for yourself that investors have kind of focused on margin expansion and subscription revenue rather than pure growth alone. And that's kind of curious, as someone who pays one of those subscriptions. But listen, what we've also seen is the kind of broader software sector that also remains sensitive to US yield and NASDAQ risk appetite. So, you want to watch what their guidance is, what their enterprise spending, okay, commentary is this week. You can watch and see software names. They can move pretty quickly based upon forward expectations. The thing that I was intrigued is that you can see this has been in a pretty strong downtrend, hasn't it? But what I was looking at is, I see this as a double bottom forming here, and what has been acting as resistance is the 20-period moving average there, isn't it? And look where we are. We're kind of at $80, big round number. The 20's up here. We've formed this kind of double bottom at 60. So I'm looking at, are the earnings good enough to get us above that 20-period moving average, where if you look at it, the last time we were closing above it was, a good 9 months or so ago. Since then, it's been actually really fantastic dynamic resistance. If it gets above, well, then I'm looking at it, 100 then starts to become a magnet, by which time probably the 50 is down into this area as well. And then that becomes the next inflection point. Can it get above 100 and above the 50 to go to 200? Or does it sort of run out of steam here and sort of drift its way lower? So, I think it's an interesting chart. You might want to add that to your watch list, as I said, and see whether the earnings later this week can act as a pretty good catalyst for the next move. And finally, charts of interest before we switch across to the live markets. This is Oklo, which has been a little bit of a personal favorite of mine for various reasons. One, there's been some good moves in it, some pretty volatile moves in it, okay? But also it kind of taps into one of my interests, okay, is that Oklo, it remains kind of, it's probably fair to say, one of the kind of market's highest profile speculative nuclear energy and SMR, small modular reactor themes, all right? Whereas here in the UK, we've kind of dithered and dallied over the last 10 years about SMRs. Okay, the Americans have taken a much different approach on that. They're really going a bit gung-ho for it. I appreciate some people might say using the word going gung-ho when you're talking about nuclear reactors is perhaps not the best use of language, but you get the gist. You get what I mean, all right? The interesting thing is that kind of those small modular reactors, that nuclear power continues to have, media and institutional attention, all right? A lot of that is off the back of all of that drive and excitement about AI. Well, if you're going to have all the AI, you're going to need electricity demand, okay? And you're going to have energy security. And so Oklo is kind of filling into that, okay? It feeds into that. So that's, as I said, one of the reasons why it's of interest to me, all right? The thing with all of these things is that you're looking at, right, what's the regulatory process? What, if any, government support, okay, is being offered to these guys to sort of keep it going in the right direction. But as you can see from the charts, all right, you've got to expect volatility. There we go. This is where I put it here. My kind of first piece of it, all right, down around about $20 when it bounced off the 50-period moving average. We can see it flew up, but I've talked about this before. Once you see price starting to go vertical, okay, and going parabolic, you just have to tighten up your stops and hold on, because very often you get the same here. We came back down from here, all right, $190 to $50, all right, okay, and now we've bounced off, and once again, I see us literally we're a little bit coiled up there between $70 and $80, between the 20 and the 50. If we look at the price action here, okay, sort of just lots of wicks to both the sort of the top and tails there, okay. There's some movement going on, and they are reporting on Wednesday evening after the market close. So once again, it's a case of what will that kind of earnings, or what will that guidance be like? Can it be the catalyst for the next move in Oklo? Is this just us literally coiling up before we get to the earnings to be the catalyst for the next move? So as I said, you might want to add that to the watch list. All right, there we go. Let us switch across to the live markets now. So just bear with me 1 second, and we'll do that. Let's bring these up. Okay, here we go. So this is indices commodities chart. I've got Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and then oil. Right, where's oil? Okay, oil is, West Texas is just trading under 100 there. Okay, not unsurprisingly, lots of swings on that weekly chart, and we're just under 100. And of course, the sort of rejection of the Iranian counter proposal, that's going to have an impact there. So let's see how that plays out. But I suppose, whereas that oil price is showing up all of the kind of geopolitical tension, you wouldn't be expecting that if you were looking at, there you go. NASDAQ closing weekly at all-time highs. S&P closing weekly all-time highs. Russell closing weekly all-time highs. Nikkei closing weekly on the all-time highs, okay? And as I said, what we see is, I look at the Dow, the Dow for me is just basically coiling up there under the 50,000 level. Okay, it's just under there. Okay, it hasn't pushed to its highs like the others. It's coiling its way up there. Okay, so that's why you want to add to your watch list to see whether it finally follows. Okay, or whether this is just the kind of the laggard turns to the leader. In Europe, DAX is of interest because we popped away up, and I think I said this a couple of weeks. We're kind of above the weekly in the 20 and the 50, but I wouldn't exactly say that is in any way sort of inspiring. It doesn't really sort of, yes, we're holding above the 50, but it doesn't exactly make me sort of look at that in a way of, yep, I want to be a big buyer here. If anything, I look at this as a little bit like, we started the year with a bit of a double top, and now so far we are kind of forming a lower high. Is this an indication of us basically starting to kind of roll over? That's my kind of natural concern there. So, as price builds there, that's why I'm waiting to see, can it give me any sense of what it really wants to do. Talking about, sort of a little bit dreary performance. Well, the FTSE, which had a fantastic 2025, as you can see, fantastic 2025. Look at that, beautiful, beautiful weekly chart like that. I say it all the time, when you've got a great trend, don't fight it. All right, you want to ride it. But then what stopped it? That big bearish engulfing candle, the big bearish Q reversal, and then we kind of popped the way up, but we formed that kind of lower high, and then look at us last week. All right, that's just a little bit of a, some might say that's a kind of a bit of a bearish pin bar, bearish rejection candle. Others might say it's a bit of a high wave candle because you've got good wicks either side. Some might want to call it a spinning top, but etc. Either way, it's not exactly wanting you to jump off there. And if you see how we started this week, well, as I said, you can see that Starmer's speech has not exactly sort of put a light under the FTSE performance, as it's kind of just sat there. And it wouldn't surprise me if we drifted our way back to sort of that 10,000 level for FTSE. That's what I'd be looking at there. Quick look at some of the other commodities. Gold. If I look at this on the weekly chart, the last couple of weeks, there are wicks there. Okay, so there is providing buying support. But equally, I'd also be saying, well, we're in a little bit of that kind of little bit of a range there. Okay, I wouldn't exactly say it's terribly exciting. And when I go down to the daily chart, I find if I look at that 50 period moving average has rolled over, hasn't it? And it's acted as really fantastic. Okay, dynamic resistance there. Okay, we've had, this kind of significant level here. All right, at 4,400, but classical TAs might say, well, actually, Paul, is this not a descending triangle that's building? Okay, and I know my drawing isn't great. As I say, I'm a better trader than I am an artist, but you get the gist, don't you? That 50 is it's starting to basically in control and pushing price on gold lower. That's what I see there with gold. With silver, it's kind of been a little bit more interesting. We've kind of been pushing our way between that $70 and $80 level. But the daily chart, what we've actually started to see is back up to 80 and above. All right, pushing its way up there. That 4-hour chart there. Okay, last week, bang, we pushed away up, and now we're pivoting around that $80. And as I said, to me, that is a war off, risk on move. Okay, because if there is a war off, risk on, well, then invariably that would mean demand for silver. Silver has industrial demand, and that would be what's driving that. Okay, so that's the way I would look at that there with silver. Bitcoin on the weekly chart. Okay, it's got above its weekly 20, having sort of coiled its way up here and pushed it away. Remember, we're kind of up at this level here, sort of 82,000. It looks better when we go onto the daily chart. Okay, on the daily chart, it's a STAM 2 Bravo. We coiled our way up here. You can see how the 50 has turned, and we've been actually for about the last 6 weeks. So, quite a nice uptrend, haven't we? Above its 20, above its 50. And now we're running into the 200. And so I start to look at, well, look at how that, even today, look at how that's happening. We're getting the 200 coming down. We're at the 80. We've got the 20 and the 50. Once again, is this just coiling up? Okay, the price and the moving average is coiling up before we either get a catalyst, all right, or for the next move, or literally everybody just sells away, sell in May and go away, because everybody's just had such a volatile first 5 months of the year. Everybody's just ready for a break, ready for a holiday. I know I am. So there you go. That's Bitcoin there. Okay. You might want to sort of, as I said, just watch and see how it reacts around that 80,000 level and the 200 period daily moving average. Okay, I appreciate that I'm running over a little bit, but there is so much going on. Okay, just want to share with you what we'll do is we'll take a look at US dollar, Kiwi dollar, sterling. Okay, and draw it to a close there. So this is dollar page, Aussie dollar, Euro dollar, pound dollar, dollar Swiss on the daily, Kiwi dollar on the daily, dollar CAD, dollar yen, dollar index. Okay, as always. All right, I want to see what's going on here. Let's start with, as always, dollar index weekly chart. Anyone excited by that? Anyone sort of, yeah, probably no is the word. All right. So, we did close lower. All right. We did close lower, but, you can see this week, look at that indecision. Now, listen, we're a few hours into the week. All right. But what it's telling me is that, everybody, even on the daily, everybody's like, well, what's going on? What are we going to do here? Nobody's really sort of full of any kind of excitement or vigor. 4 hour chart, okay, 4 hour chart. We bounced there beautifully off that 200 period moving average, worked our way down. The 50 here acted once again as kind of dynamic resistance, and just look at us here. Yep, we gapped up, dollar gapped up because of the rejection of the Iranian deal, but it didn't flow any higher. Didn't push any higher, has it? It's not really kind of driven its way any higher. And if I look on the intraday basis, we gapped up, we pushed up to the 200 as we came into the London session, and yeah, we drifted off. And if you look at that, the last couple of hours, last 3-4 hours, not doing much. I think it's waiting to see what the Americans are going to do, waiting to see what Trump will have to say, because I'm sure there will be some sort of commentary later on today as the market's open. We've come to learn, come to expect that. That's the way it plays. But, when I look at this, daily chart, Aussie strength, dollar weakness, Kiwi dollar, Kiwi strength, dollar weakness. Okay, that's a bit of a no surprise there. Dollar strength, Canadian weakness. Okay, that's curious to me. Okay, what we see is dollar weakness, Swiss franc strength. Cable, well, it's just coiling. All right, even euro, it's sat on that 200 period moving average. Well, I wouldn't exactly get excited about it. Yen, okay, intervention, but it hasn't been able to break that daily 200 there. Okay, that's not showing any interest. Let's have a quick then we'll look at sterling. So Kiwi dollar, Euro Kiwi, pound Kiwi, dollar Kiwi Swiss franc, sorry, Kiwi yen, Aussie Kiwi, Kiwi CAD, all right, and then gold. As we said, Kiwi is strengthened against the US dollar there. Okay, we can see that. Kiwi, that has been euro weakness, Kiwi strength. Okay, that has been sterling weakness, Kiwi strength, although it's changed a little bit today. Kiwi Swiss franc has been, I would look at that as being kind of in a range. Kiwi has strengthened against Canadian dollar. Against Aussie, well, I'd probably be just saying that, it's in a range, but that's what happens when you get 1v2. I don't really trade 1v2, all right, in terms of the STAM. And in terms of Kiwi yen, well, that's a little bit, we had seen that kind of Kiwi weakness, but then we pushed our way up there, right? So, we can see that there is Kiwi strength there coming in, okay? There is there, it's not across everything, but it's across enough for it to, A, to make it count, and B, for us to be able to sort of see, why Kiwi dollar has pushed its way up to second place on the STAM. Right, let's finish with sterling. All right, as I said, I'm pretty sure I ran a little bit, but I'm just trying to make up as I can during these weird and wonderful times. Okay, so here we go. Cable. All right, there we go. That is just coiling up there. That's the way I look at that in terms of the price action there, what's going on. In terms of pound against yen, I see us just sat there on the 50 period moving average. All right, sat there on the 50 period moving average. Are we going to get some sterling movement? Are we going to get more Japanese yen intervention? Your guess is as good as mine. Against Aussie, sterling, okay, is weakening against the Aussie. Okay, no surprise there. Against Kiwi dollar, it is weakening there. Okay, that's sterling weakness, Kiwi strength. Sterling has strengthened against Canadian dollar, but everybody has. What we've also seen is sterling has weakened a little bit against the euro, but today might give us an interesting view on that. And pound against Swiss franc has been quite quite a few swings there. Okay, we've had sterling strength, we've had sterling weakness. Bit of an interesting day today. I think there's some things afoot there, but what we're seeing is that it's a very mixed picture on sterling there. Okay, there is no particularly clear trend, and as we looked at the sort of gilt 10-year yields there, this kind of political instability and the overall geopolitical instability, is not exactly filling sterling traders with a lot of joy and happiness. So tread carefully in sterling if you're going to try and swing trade it this week. Okay, there you go, ladies and gentlemen. Let's draw it to a close there. As I said, I appreciate we were overran a little bit, but there's just so much for me to share with you these days. Okay, there's so much going on. But anyway, I hope that helps. I hope that gives you a little bit of help and a little bit of insight into what's going on. As I said, we're going to be away for 2 weeks now. Okay, we'll be back on Monday, 1st of June. I hope you have a couple of great weeks of trading. As I say, make sure you're managing risk. Make sure you're on top of the news flow and on top of the order flow. Trade well, everybody, and I'll speak to you soon. Cheers.